Good afternoon, everyone. My apologies, we're a couple of minutes late. Welcome to the ESS BIZTOOLS COVID-19 Survival Panel. This is our 15th session since we started these Friday 12 noon webinars. I know a lot of you watch them at other times that suit you better, but that's great. If you've got any questions, please send them through to us. Today I have with me Nigel, who's going to be talking to you about crowdsource funding. So welcome, Nigel. How are you today?
Thanks, Peter. Thanks for having me, and hello to everyone. Look, I'm in Sydney and things are pretty good here as far as the COVID world goes. Hopefully, things don't get out of control like our neighbours, but, so far so good.
Yes, that's great. Okay, so we're going to be talking today about why equity crowdfunding should be on your radar, and that's what Nigel Abbott's going to be talking to you about. And I'm going to give you a commentary on business advisory services, which now appears to be in demand. If you've got any questions, can you send them through to me, thanks? And I will give them to Nigel. If you're watching this on the live feed on Facebook, and welcome if you are watching this webinar on Facebook, you unfortunately can't click straight onto our live webinar. So if you have any questions, please send the email to me, peter@essbiztools.com.au, and I will pass those questions on to Nigel, and we'll get the answers back to you. And we will publish the question and the answers on the ESS BIZTOOLS website. I now want to introduce you once again to Nigel Abbott, Director of Fundzition. Nigel's going to make a commentary today, a presentation on why equity crowdfunding should be on your radar. This funding channel may be perfect for your clients. So we're just going to switch across to you now, Nigel. Nigel, thank you.
Thank you. Okay, I'll share.
You're on view now. Thank you.
Okay, I'll just take this to full presentation. Is that all good there? Can you see?
Yes, that's great. Thanks.
All right, terrific. Well, so although the essence of this is equity crowdfunding, I'm going to elaborate on a little bit more and take in a sort of bigger ecosystem or a bigger opportunity and some of the other moving parts that offer some really good support for growing businesses. So the manner in which we always talk about this is providing an opportunity for businesses to reach their full potential. And quite often that will take growth capital. It also takes support, advisory services, which Pete's going to be talking about, because, there's so much going on these days, as you know, that a business needs good quality support and advice to drive it forward, and it'll quite often need capital as well. And there are quite a few different kind of mechanisms to obtain capital. Crowdsource funding legislation's been around not quite 2 years. It's starting to gain some momentum and get some good traction, and there are certainly deals happening and getting away even with the COVID-19. So investors are still investing, which is a really good sign. And also we have a lot to do with the US, and I know for a fact that some of the platforms over there that run under what they call crowdfunding and 506C have had their best quarters ever. So the money is still flowing. And obviously what's happened with COVID-19, we could say, well, is funding harder to come by? Will businesses need to recapitalise? Those businesses that have always run very fine to the line, but are good quality businesses that maybe didn't quite have that, runway that's needed, will probably need to recapitalise, and that also provides a good opportunity for investors. So we're going to sort of kick off with just having a bit of a synopsis of equity crowdfunding. As I said, it's been around a couple of years, almost 2 years. I think in total, almost across all the platforms, about $50 million has been raised, which is quite small. But as I said, you know, it's starting to gain traction and will start to build on itself. As an accountant, I would see that, you know, you need to know the basics of equity crowdfunding so that if you get asked by one of your clients, that you are able to give them a little bit of insight and a little bit of knowledge around the legislation, because that's very, very important, but also where they should be going to have a look at the different platforms, etc., or where to go to get resource of information. So SMEs can raise up to $5 million per annum, which is a fairly significant amount. Just for an example, in the US, it's about $1.07 million. In the UK, I think it's about £8 million. Retail investors, so really at the end of the day, you could say that equity crowdfunding is really just equity funding with a retail component. Sorry about that. There's no restriction for sophisticated investors. You can advertise and market these raises, and that's really important. So an issuer can, through display advertising, video, whatever they like, you can put it on the side of a bus if you want, and talk about your particular raise, as long as it's factual, of course, and there's disclaimers, disclosures. Foreign investment is allowed. Now, from an SME perspective, I've put this diagram together because I think it nicely communicates where crowdfunding fits in. We call it disruption. So really at the end of the day, you know, not so much that early startup phase, but certainly you could say that seed or angel phase through to Series A. And, you know, when you think about the amounts that are getting raised from 250,000 up to sort of, you know, a couple of $1 million, I think the largest raise is over $3 million. You know, you can see where it fits in those two call them pillars, which is seed and Series A. And then obviously going on from there, you know, you're getting into much bigger licks of capital. Mind you, though, there have been a couple of companies that have come back and raised twice, and they're allowed to do that for the reason being that as long as they're under 25 million revenue, 25 million net tangible assets, and they're not raising more than 5 million a year, they can actually go back. So if I raise 3, I could actually go back within a 12-month period and go for another 2. All right. We haven't seen that on a big scale, but there certainly have been some businesses that have been quite successful and that have raised twice. So 2 director minimum. If there's only 2, one must be Australian. Obviously, the company must be domiciled in Australia. You know, you can have unlimited employee and CSF shareholders. So the old 50 rule sort of under 708 fades away, and you can have large shareholder bases. So that's one thing that's really important to note is the companies you're dealing with, the advice you need to provide is that, look, you're going to have a larger shareholder base. Don't be frightened of that, because there are good platforms that allow you to manage those shareholders very, very effectively. But also you flip it on the other way and you go, well, those shareholders are all advocates. If they're putting in smaller bites of capital into your business for a smaller shareholding, they're all potential marketers and advocates of your business. When you raise capital in this manner through CSF, crowdsourced funding, you set a minimum subscription and a maximum subscription. So, you know, once again, in helping a business get ready and their house in order for this type of raise, you go, okay, well, if you say you divided your growth strategy into 3 phases, what would be the minimum amount that you would need to execute that first phase? And that might be setting a minimum subscription. So let's say I wanted to raise $750,000. That's my ideal target. If I didn't achieve that, I set a minimum. So the minimum might be $250,000. Okay. And that's going to help me achieve my, call it, phase 1 growth strategy. Phase 3 growth strategy or phase 2 might be the full 750. So at least if the minimum is achieved, the offer is deemed successful and the funds will be released to the issuing company. The cycle is 90 days, but you can, in your offer, make that smaller. So if you decided just to go out for 45 or 50 days, then you can. 90 days the max, but if you set a 40-day or you set a 50-day, you must stick to that. So you must raise the minimum amount or the minimum subscription within that duration. There is a 5-day cooling off period. What I love about crowdsourced funding or equity crowdfunding is it gets a business to get its house in order, because you do have to produce an offer doc. The ASIC template, which is provided, normally it's around a 30-page document, and it really requires all of that good quality information for a retail investor to make an educated decision. And of course, it has all of the risks in there and the disclaimers and disclosures as required. And really, at the end of the day, you know, an investor isn't supposed to invest and press that invest button until they've actually read the document and then acknowledge that. So there's a bunch of checks and balances along the way. As I've said, you know, it's a really good opportunity for accountants as well in their advisory services to take part in this process of helping this company get ready for crowdsourced funding, which basically can help them generate additional revenue. And we have a bunch of tools that allow channel partners like accountants to help prepare. So one of the things I love is that with a business, you know, you've got potentially you go out to your network, which could be customers, stakeholders, and you can utilize those as shareholders. And quite often a customer of the business has already conducted their due diligence because they've already been a purchaser of your product or services. So you're turning, you know, customers into investors, and someone that potentially likes this offer, who is an investor, potentially will become an investor. So you're creating that loyalty, you know, and think about how much barbecue talk would go on. So really, in a way, you're increasing that share of wallet and advocacy within the system. Good example is, imagine if you had 500 lifetime customers investing, you know, $2,000 or $1,000 each. There's a 500 to $1 million. And look, the average investment parcel is a little bit over $1,000. So, you know, you might get, you know, X amount of or sophisticated investors taking up a certain percentage, and the rest is spread across the retail base. I'm just going to quickly hop into this here, just so you can have a look a little bit at what we're doing as far as Funsition goes. We got our license last year, but we've also been very, very active in branching out into the US as well. So what we've managed to achieve with Funsition is to be able to create a bit more of a comprehensive ecosystem. So it's not just really about equity crowdfunding. The platform that we've created also allows for wholesale investing with sophisticated investors under Section 708. So the platform itself is also a good way to showcase an offer using the legal infrastructure of equity crowdfunding. But of course, because you can have sophisticated investors, you could either operate under a Section 708 where you don't need a full offer doc, or the platform could operate as a wholesale funding channel and operate under Section 708. We've also built a platform, a Funsition platform in the US, and that operates under a regulation called Regulation D506C. You have to be an affiliate of a registered broker-dealer, which we have in the US. And the reason I'm alluding to this is simply because, you know, you're not necessarily just confined to Australia. If you think about a funding journey of a business and you as an accountant advising them, there's more than just Australia. You could actually, using a 506C exemption, move to the US, don't have to be domiciled, and raise capital via accredited investors. Or if you wanted to, you know, increase your your market and go to the US, that's a bit of a platform or a soft landing to help you get there. So we see that as really, really critical. But right now we're focusing on Australia. So just, you know, when you're thinking about this, just remember that if you're operating under a Section 708 where you're just trying to get sophisticated investors, you know, utilizing a platform is also a good idea, because think about it, it's a great way to showcase your offer and use that as a data room. And I'll just quickly show you a lovely deal that we're just finalising at the moment, which we showed around, was quickly taken up, called Food Street. So you can see it here in its full glory. And this is really just showcasing the deal after the raise. It's not showcasing it before the transaction. So it's very important, you know, so that people viewing can understand, you know, an overview, the team, what are all the documents, question and answers. And it's a nice way to really showcase an offer. And we're very excited about that one because it was just taken up so quickly, and that just demonstrates there's still money out there. The other thing that we focus on as well, apart from specialised advisory services, certainly in the, you know, in marketing, advertising, media, you know, etc. There is that opportunity for you as an accountant with, you know, the financial modelling, etc., you know, helping with the business planning, where you can generate additional revenue because you are guiding this business. The other thing that's really important is what we call the cap table and registry services. So if you think about raising capital, you've got this front end where you're meeting ASIC's requirements with the offer. But remember, when someone invests, there is a process that sits behind that investment, and that is, you know, KYC, so know your customer, that identification, anti-money laundering, and also then moving the money into the trust account, sitting there until such time that the deal is successful. But also very, very important, and something that we're focused on through our technology partner in Canada and the US called cont'd, is what we've been able to do is through our cap table platform is take through this process of verification with KYC ID and AML, is move the asset, the equity, onto blockchain. So the blockchain application is called Core Chain, and really it's a blockchain application that sits on a big enterprise distributed ledger technology. And the reason this is appealing is because once the investor has met the AML KYC verification, that is truth. When you have truth, that can sit on the blockchain. And what this does is this is setting up a business and its shareholders for secondary trading down the track. Secondary trading will be successful because of blockchain, right? Because all of the information is contained in that. So these are all the sort of things we're thinking about, not just about you know, providing capital for a business to grow and reach its full potential, but also being very investor-centric, of ensuring that the investor's looked after. We don't put anything up unless it meets all of our vetting criteria, but at the same time, looking at the journey going forward. And that could be a second transaction, but also making sure that the investor has this opportunity with a tokenized equity for potential secondary trading down the track as it starts to come about. And it is certainly in the US, and we will see movement coming about in Australia. So we're preparing businesses for that, and it's a very exciting development. Okay, just quickly, investors. So the big game changer is retail investors can invest up to 10K per issuer. And there's no cap on the number of investments. So Nigel Abbott could go out and invest in 4 or 5 different companies. There's no sort of maximum, as long as, you know, I don't put more than $10,000 into one particular raise or issuer. Great opportunity for self-managed super fund trustees. In actual fact, if you look at SMSF, 750 bill, how much is sitting in cash, mate? If they all just had an investment strategy where they put a small parcel into unlisted investments, think what that would do for, driving our sectors forward from a technology perspective, etc. Sophisticated investors, no cap. The big game changer also is you can advertise and market these, which is really important, which is a great way to help build an investor base. You can also start with just the customers and stakeholders of the business first. 5-day cooling off period. And if the offer hasn't met the minimum subscription in its duration that it nominated within the 90 days, guess what? The money goes back to the investor. Okay, so there's a safeguard there. And this is just quickly a quick example of the investor. So once again, they're looking at the offer, they accept the risk acknowledgement, reviewed, go through a share application process, KYC, AML, BPay's made, and then that goes into a trust account. And then once the offer's deemed successful with the cap table share registry, can go on to the core chain, and then the funds are released and they receive a share certificate, an e-certificate. So really, equity crowdfunding enables investors to choose a business that they feel passionate about, maybe a sector or an industry, or they're a customer of a business that they would love to have a shareholding in. And so it's really opening up a different channel for companies to access capital, but also to have this sort of a crowd of investors that are supporting and following the business. And, one of the great opportunities is that use those investors from a marketing perspective, keep them updated on the achievements and the benchmarks you're hitting for the business. That's really important, because you've got to remember, if you've got, say, 500 investors out there, which might seem daunting, flip it around, they are also advocates of your business, which is really, really important. But just remember, in this whole infrastructure, you're not just necessarily confined to equity crowdfunding, because not all businesses are suited for equity crowdfunding. But with a good platform, and the guys that are sort of forward thinking have also taken on wholesale raising or wholesale investing as well, which is really important, because you've got the infrastructure there. Yes, you can't show it to the world and you can't advertise it, but you have the infrastructure. And once again, as I said, that goes out to our more closed, sophisticated investor base. So it really is a new channel of funding, although I said it's almost 2 years old. It's starting to get some traction. If we look to the UK, there's been a massive amount, and it's very much part of the capital markets landscape now. And this is not going away. It's good legislation. The legislation was developed by looking at what the other countries are doing. It's good, solid legislation. It's not going away, and we're only ever going to see this grow, and more businesses will look into it. So maybe with COVID-19, as more businesses come on to recapitalise, that perhaps as an accountant, you can give them a little bit of insight as into this as a potential funding channel. Thanks, Pete.
Thanks very much, Nigel. Do you just want to comment on the, I call it the cousin to crowdsource funding equity raising, early stage innovation companies, because you will assist people to raise capital for those types of companies as well?
Yeah, look, they're early stage, and they've got an MVP and it's a solid business, absolutely. And the good thing about ESIC, and to be honest, our own business, when we raise capital, met all the ESIC requirements, is, the early stage innovation companies, it's a great opportunity for investors to, get a tax benefit. There's no capital gains tax on your investment. As long as, I think, you hold it for a year and you sell it for 10 years. And then there's a 20% tax credit for those that invest. So you imagine if you invested through your self-managed super fund, what a little bonus that is, 20%. So, I mean, you know, you're an expert on this, Peter, but look, you know, that's one of the things we look at. Does that business meet that? And I think the cap is 200,000. So the business has to have turned over less than 200,000. So you're really getting more of an early stage, early growth business. We don't really look at startups, but we certainly look at early stage, early growth if they have a very compelling narrative.
Thank you. And from an accountant's point of view, and obviously that's who we're targeting this presentation to today, just bear in mind that if someone's completed their research and development and they have a good project and they might be needing to get some extra money to commercialise the process, and that's why the federal government has a program called Accelerating Commercialisation, which is up to $1 million on a 50-50 basis. And you can utilise an early stage innovation company capital raising as that capital contribution towards the Accelerating Commercialisation grant. So it can all fit in very nicely. And obviously Nigel's organisations is able to assist in potentially finding some of those investors that might be interested. Obviously, the companies and the accountants have got to give you a briefing so you understand what the company's about and what their technology is. But I think this is all very exciting stuff. And in some respects, the last 2 years have been a bit of a challenge in crowdsourced funding. We originally had it that you had to be an unlisted public company, and then it got converted back to a private company. And now we've had COVID-19. So hopefully it's all going to restart again now in the next couple of months, because I think a lot of businesses are going to be looking for refreshment of their capital after all these problems.
You know, banks aren't going to make it easy. So, you know, maybe the private market is really where it's at. And I also, you know, I think it's important too, is that one of the things we love, and you'll see it through the link that Pete provides, is our cap table management platform, is that it's free. Okay, so we do say, you know, if it's under 20, but basically it's free. And all of those businesses you accountants have out there, I would highly recommend, certainly from a compliance perspective, is that, you know, you get those businesses using our cap table management system, because at the end of the day, if you've got that house in order, it's preparing you. It's just one of the other things you need to prepare as you propel forward for growth capital. And it's just good compliance. And it also allows you to look at your cap table from a snapshot perspective. You know, any directors meetings, there's folders you can upload, you can track everything, and it's a great platform and there's no cost. So I, you know, highly recommend, you know, having a look at that. Yes,
thanks for bringing that up, Nigel. And that material that Nigel was just referring to will be on the ESS BizTools websites next week. We've sent it to our web consultant, and he's putting it up for us. So, so if you've got any questions on any of that, please let us know, and we will follow them through with Nigel. So thanks very much, Nigel. And I'll move on now and just get the next part of what we want to discuss today. I'm now going to talk to you about business advisory services. What's needed for accountants. And I just want to refresh, hopefully you read some of these articles, but the Financial Review on the 18th of June ran a very interesting article, Accountants Become the Centrelink of Business World. And in that article, the author indicated that the accountant of the future will need to be a compliance expert. Now, most of you are already that, of course, especially when it comes to taxation and superannuation, and some of you obviously within financial planning. But so it's acknowledged that you'll be the compliance expert who can grapple with fast changing rules. And gee, haven't we seen them over the last 4 or 5 months? And congratulations to the accounting industry on a job well done to keep your clients informed. And I know there's been some challenges, and I know there's been some very long hours and weekends, and hopefully your clients have appreciated that. But you'll be providing advice to clients about their businesses. And this is the big change that the market believes is going to happen. Advice about their businesses, not just taxation. And the article indicated that savvy accountants will use this as an opportunity to shift gears and provide clients with wide-ranging business advisory services. You know, people like Andrew Geddes that started Financial Management Research Centre at the University of New England in Armidale 35 years ago, were really talking then about accountants being far more involved in assisting your clients run their businesses. And this is all now starting to come to fruition because your clients have realized, especially over the last 4 to 5 months, that there's a lot more that you can do for them. And the article also indicated that communication is going to be very important. I had someone decline being part of this panel recently who's told me that she was a little bit scared about public speaking. I said, all you're going to be doing is talking to a computer screen. You can't see the people. But if you've got that fear, please do something about overcoming it, because Zoom and other forms of communication are very important. Plus also, of course, you need to be able to stand up and talk to a group of more than 3 people to identify what your subject matter is. And the Financial Review is saying this is going to be just as important, your communication skills, as your technical nous. That's worth thinking about, isn't it? And whilst compliance has been and always will remain a key requirement for accountants in public practice, advisory work in all its forms is growing, is what the article also said. You have to understand your clients' books, but you also have to understand what drives your clients. Now, you don't get all this out of your clients when you're preparing tax returns or just annual set of accounts. And I know that because I ran a practice for many years. But I'd also been the chief financial officer of a listed public company for 10 years prior to going back into an accountancy practice. And I can really confirm to you that there are significant differences. If you're the accountant in an organization, you are embedded within the business systems and a far broader footprint in that organization than what you currently have as the accountant for the preparation of annual accounts and tax returns. So this is the challenge, because the marketplace, the business community are now saying that accountants should be accepting this role. Now, obviously your client's got to agree to this, because your client's going to be paying for it. And this gets back to the communications, having a conversation with them, talking through the process and convincing them that you do have a wide knowledge on business matters. And if you haven't, I'd suggest that you start improving your skills so that you can communicate on more than just the client's taxation affairs. Because you need to be able to guide them through the challenges of running a business as if you were the Chief Financial Officer service. The CommBank produce a very interesting article every year that I hope you read, called Accounting Market Pulse. You may have missed the latest edition, which was released late June. And if you have, please go on to the CommBank Accounting Market Pulse report website and read it, because it's made a very interesting observation, very important, because they asked a question to the panel of accountancy firms that they interviewed. And they draw these firms from the big end of town firms, the top 100 firms, the middle level firms, and small firms. And they asked which service in the accountancy consulting marketplace do you anticipate will be in the highest demand in the next 6 to 12 months? Take a second, write it down. What do you think it will be? What's going to be the highest demand area that you are offering in the next 6 to 12 months? And the answer that was given was business advisory services. And in the ratings that were given, that scored 70% of the response. The next closest was business recovery and insolvency. Now, I like the first part, business recovery, because a lot of you are working in that area. Insolvency, I don't really like, I never have, but unfortunately, it will probably be following the end of September when the rules that were temporarily changed in the Corporations Act are going to be removed, and banks and other people will be able to take recovery action. But that was a rating of 61%, but tax consulting was down at 48%, and everything else was well below it. So what's this mean? This means that your peers in this industry are telling the world that they believe that business advisory services is the most important thing that accountants can provide to the small business and medium-sized enterprise markets in the next 6 to 12 months. Is your firm going to be involved in this? Is your firm going to be proactively indicating to your clients that you can assist them with this range of services, that the accountancy industry is basically telling the marketplace that accountants can provide? I think it's now the time for you, if you haven't already done so, to develop a strategy within your firm, because there is an expectation now from SMEs that they will be able to go to you and confidently talk to you about services beyond taxation. This is not excluding taxation. You will still be doing the tax return, even though I think that's becoming more and more of a commoditized product. They still need tax returns because Mr. Morrison's going to be looking for tax to pay for all this support that's been given. You will need to identify within your firm a leader of business advisory services. Now, some firms are setting up completely separate sections or teams within their organization, and that's great, but that won't suit everyone. It won't suit very small accountancy firms, but someone, whether it's a partner or a manager or some sort of external person, a consultant, should be made the leader so that this team can be brought together and strategies implemented. The team in your firm then needs to undertake some training. Now, if you subscribe for one of our products, we've got a complete training package. An hour a week for 13 weeks will take your team through a full training package on all aspects of business advisory services. It's very important they're trained, and that they're trained to be looking for and thinking about issues outside of the taxation issues. Because in taxation, you really don't dig very deep into a business. But if you're going to be supplying business advisory services, you need to understand the whole parameter of that business and what its costs are. So what is business advisory services? I think in the first case, it's listening. Conversations, talk to your client, understand what turns them on, what drives them to be working the hours and making the business investments that they make. And talk to them about issues beyond taxation. Don't tell them you're going to sit down and talk to them every month as a change of process and then want to discuss taxation issues with them every month. Leave that for once a year. They want to hear from you on matters which will help them to run a better business. And you do that by asking questions and showing some empathy and understanding. And use your commercial knowledge to be able to give them input. Whether it's on debtors, whether it's on opening accounts, whether it's on supply chains, whether it's on your job costing system that your client's got in operation. And you'll be delivering a role very similar to what your friends that you went to uni with and perhaps did your PY or other post-degree studies with who are working in commerce are doing. And they will tell you that They don't spend much time on tax returns at all. In fact, when I was a CFO of a public company, it was well down my list, the tax return. I was more worried about answering the CEO's questions that I seem to come firing at me every day. What would be the result if we did this? What are the changes here? What's the currency conversion to such and such a country? How much can we afford to pay in the market? Because you will then be delivering a role as a chief financial officer, which I think goes hand in hand with the concept of supplying business advisory services. And you would be doing more work than the preparation of the annual accounts and the tax returns. Some clients have numerous problems and concerns, and they need someone to discuss them with. That's what happens in bigger organizations. And I think it's a service that you can be offering to your clients. You might not want too many of the 3 a.m. phone calls. You might have to discourage your client about doing that. In the business world, my CEO didn't mind making a few of them at times if he was up and about. But it's a real opportunity for you to put into practice the trusted advisor status for your clients. Accountants have got this status. I think we can make it a even higher recognition from the SME community if, as a professional body of accountants, you are able to deliver this broader range of business services to help your clients add value. So where do you start? I think you start offering products which are going to help your clients get through the current challenges. And we know what they are. 2020-21 is going to be a very difficult year for everyone. And many of your clients are going to need assistance to navigate through these difficult times. Now, the government's made some changes this week, which some of your clients will be very appreciative of, with the JobKeeper extension, even though the rules have been changed, and the extension of the coronavirus SME guarantee loan to become $1 million loan facility for 5 years. And you've got until June next year for your clients to apply for that. But one of the things you might look at is how they're going to survive these difficult times. That could be an appropriate theme for you to be talking to your clients. We have a product package built around this, which encourages you to discuss strategies with your client. Sit down and have a few-hour meeting with them and look at what the issues are with their customers, with their suppliers, with their team, their leadership team, their job costing. So it's a due diligence review on their business operations. Updating or preparing their business plan. Looking at their budgets and cash flows, three-way financial forecasts, looking at the next 3 years, and if they're interested in applying for one of those coronavirus SME guarantee loans, they'll need 5-year projections. Verification that the selling prices and charge-out rates and productivity will achieve their targeted profit. We have a product package that covers all this for retail, for tradies charge-outs, for manufacturing charge-outs. And it's amazing how often when people use it, they contact me and say, gee, I'm glad we did that. We had a turnover figure that someone had literally plucked and put into the budgets. But no one had sat down to make sure that the charge-out rates, the productivity percentage, the markup on products bought in for clients, the overhead costs, when you put all that together, were we going to achieve the profitability that our budget was telling us we should have got? And in many cases they weren't, so they had to do some fine tuning. And in a retail environment, it could be the product mix and the individual markups. It's no use selling millions of dollars worth of a product that's only getting a markup of 30 or 40% if you need to have an average gross profit of over 50% in that business, which means that you've got to have an average markup of over 100%. So you need to look at this just to make sure that people aren't kidding themselves by listing a particular turnover figure and then assuming that that's going to generate the profitability thereafter. The next area I think you need to look at is business funding, and this gets back to what we've been talking about today, that Nigel's been discussing, crowdsource funding, equity raising. It's there. It's not easy, but it's not hard to get crowdsource funding, equity raising. There are laws, there are processes. You have to deal through the crowdsource funding intermediaries, and Nigel's one of those, through Funsition. But it's a way that your clients can raise up to $5 million in capital, and you will earn attractive professional fees because they're going to require budgets, cash flow forecasts, business plans, and an understanding of how this process works. And they'll be looking to you as their trusted advisor to give them that knowledge. Don't forget Section 708 of the Corporations Act. It's been there for about 35 years. It was hard to raise money before that was put in place, I can assure you. I was trying to help people raise money back then. But we've had it for 35 years. It's been fine-tuned a couple of times, but you can raise up to $2 million in 12 months. I mentioned before the government's extending the coronavirus SME guarantee loan from 1 October. It's going to be a loan of up to $1 million. 50% is still secured by or guaranteed by the Commonwealth government. And it's there. But people are going to have to apply for it and agree on the repayments. You could facilitate a monthly business review meeting, which I think is one of the most important roles that you could offer to do with your client. And by facilitating, you basically organize and make sure the reports are turned up, the figures are turned up. And what that gives you is the opportunity to broaden your influence within your client's business by meeting with the leadership team once a month and making sure a wide range of issues have been discussed. Now, I gave a proposal to someone yesterday about this, and we listed over 50 items as discussion points to be discussed in a series of fortnightly 1-hour meetings of the leadership team, which will probably take a year to work through all of those items and then the follow-ups. I think they'll get a lot of benefit out of it. The clients that I've worked with previously have. So these are the type of activities that you could undertake in offering a business advisory service for your client. I think you're going to have to be proactive though. There's an expectation by a lot of SMEs that accountants can do more services, but don't wait for your client to come knocking on the door. Show them that you're interested by contacting them. Otherwise, you run the real risk that they may believe that you want to continue to undertake the type of work that you've been doing in the past, and they'll go off and talk to someone else. You might still get the tax return work to do, but you might also run the risk of losing everything. So if you've got any questions on any of the issues relative to the delivery of business advisory services, I'd be very happy to talk to you. Nigel, do you see anything else as a user of accounting services when it comes to business advisory services? We seem to have lost Nigel there. Okay, we'll move on. The COVID-19 update that I want to give you today, the super access to access up to $10,000 has been extended this week to the 31st of December 2020. It was originally to expire at the end of September. The JobKeeper scheme has been modified and extended to 31 March. So the fortnightly payments are going to reduce from the end of September. Businesses must qualify by having had a 30% reduction in turnover in the June quarter and the September quarter 2020 compared to the corresponding quarter in 2019. And there are now 2 tiers being introduced. Tier 1, the employee must have been employed at the 1st of March and was working more than 20 hours per week. And Tier 2 was working less than 20 hours per week on the 1st of March. And the amounts being paid have been reduced. So the tier 1 for the first quarter through to December will be $1,200 per fortnight. And then it reduces to $1,000 per fortnight. And the tier 2 starts off at $750 per fortnight and then reduces to $650 per fortnight. So there's some changes in the JobKeeper scheme. The apprenticeship subsidy scheme has been extended through to 31st of March 2021. So if you've got clients who are employing apprentices, please make note of that. And just a reminder that 2 weeks ago, the major banks made announcements that they would look to extend their current 6 months holiday on loan repayments from the end of September for a further 4 months, which would take you through to end of January 2021. But it is up to the business to make an application to the bank for this to happen. So it's not going to be automatic. And to do that, I'm sure the banks are going to be looking for business plans, budgets, and cash flow forecast summary of how the business is going to maneuver its way out of whatever problem it's currently got. So what's your action plan out of what we've discussed today? Proactively offer business advisory services. I think that will be beneficial to your clients and also obviously to your firm and your team, because they'll be working on some very interesting work. As one young lady said to me a few years ago, real accounting work. I think strategic plans for your clients for this new fiscal year are very important, because the year is going to be difficult. And if you haven't already prepared them, now is the time, so that your client has got some guidance as to what's going to happen in their business during this year. And funding for your clients. Where are they going to obtain funding in a year that the banks, I suspect, are going to be difficult to deal with, especially beyond the end of September? Perhaps the extension of the coronavirus SME guarantee loan might change some of the reaction, but banks were getting a bit worried about their exposure to the SME markets. So some of the options obviously are borrowing from friends, bank of mum and dad. There was an article in the Financial Review last week which indicated this is becoming more important once again. The new coronavirus SME guarantee loan now up to $1 million, or from 1 October up to $1 million. But obviously crowdsourced funding, equity raising. Nigel indicated the average raise is about $800,000, but it can be as high as $5 million. And also, of course, the company gets the benefit of this new pool of potential customers from their investors. Or perhaps you're converting the customers into a pool of investors. Seems to be a great outcome all round. So would you like a free, no obligation trial on the systems that we have within ESS BIZTOOLS, which we have processes and product packages to cover everything that I've talked about today? So you don't have to sit down and invent all this, and in so doing, reinvent the wheel. We've done it for you. So you can participate in a free, no obligation trial of ESS BIZTOOLS. We won't hound you if you decide not to subscribe to us at the end of that, although we'd like to know why, if that's okay. You can register for the trial by going to our website, essbiztools.com.au, and then click on access levels and then select guest trial access. And we would wish you well in doing that. Or we're quite happy to present a 60-minute webinar to you and your colleagues in your firm. Just contact us and tell us a time and day that would suit you for a webinar. And we'll take your team through the process. We'll stop wherever you want us to stop so you can ask us questions and we can answer them, so that you get a good understanding of how you can use these products, packages, to assist you to be able to deliver this wider range of professional services for your clients. Now let's move on to next week's webinar, when we're going to move into session 16. So that's 16 weeks we've been presenting these webinars in conjunction with our affiliates and with representatives from crowdsource funding, equity raising intermediary businesses, which obviously is Nigel Abbott was today's representative. So next week on the 31st of July, we have another webinar at 12 noon AEST. The presenters are going to be my colleague, Mark Holton, who is going to deliver the second part of a session he started 2 weeks ago. Get ready to deliver business advisory services. And I'm going to be presenting a summary on informing your clients of fundraising opportunities. How do you raise this discussion with them? The people who are looking to further develop their businesses, to scale up their businesses, to basically start their businesses from a research and development project. How can you assist them? So to register for that webinar, please go to our website, www.essbiztools.com.au, and click on webinars. And we'll be happy to see you at the free webinar. If you want to know more information, please go onto our website and click onto the Survival in Difficult Times to learn more. Or send us an email, peter@essbiztools.com.au, or telephone 1-800-232-088. Stay safe. Thank you for your participation in viewing this webinar today. Thank you, Nigel, for your contribution today. And remember, anyone, if you want to know more information about the services that Funsition can do for you, please send Nigel an email. His details were on his presentation, or send the email to me, peter@essbiztools.com.au. If you have any questions, please don't hesitate to contact us. Have a great day. Goodbye. I hope that everything goes well for you. Goodbye.